Imagine waking up one morning, opening your brokerage account, and discovering that a small investment you almost forgot about has multiplied several times over. Sounds like a dream, right? Well, that's exactly why investors are always searching for the next hidden gem before Wall Street catches on. Today we're talking about Navitas Semiconductor, better known by its ticker symbol NVTS. Some investors believe it could become one of the biggest winners of the AI and electric vehicle revolution over the next decade. Others believe it's still too risky. So who's right? In this video, we're breaking down the 5 biggest reasons why some long-term investors believe NVTS could become a millionaire-maker stock by 2035. But here's the twist. I'll also explain the biggest risks that could stop this company from reaching its full potential. So don't skip ahead, because reason number 5 is the one that changed my perspective completely. And before we begin, if you enjoy long-term investing content with balanced analysis instead of hype, hit that like button, subscribe, and let me know in the comments. Do you already own NVTS or is it still on your watch list? Let's get started. The first reason is simple. Artificial intelligence is creating an enormous demand for electricity. Everyone talks about AI chips from companies like NVIDIA, but very few people think about what powers those chips. Modern AI data centers consume massive amounts of electricity. The faster AI grows, the more important power efficiency becomes. That's where NVTS comes in. The company develops gallium nitride, or GaN, and silicon carbide, or SiC power semiconductor. Technology designed to improve efficiency in applications such as AI servers, EVs, solar systems, and fast chargers. If the world continues moving toward electrification, this market could grow significantly over the next decade. Reason number 2. The company isn't relying on just one industry. Many small semiconductor companies depend on a single product. NVTS is trying to participate in multiple high-growth markets, including artificial intelligence, electric vehicles, renewable energy, industrial equipment, and consumer electronics. That diversification could reduce risk if one sector slows down while another continues growing. Reason number 3. The power semiconductor industry itself has a massive runway. Analysts expect demand for advanced power chips to increase as AI infrastructure expands and electric vehicles become more common worldwide. If NVTS can capture even a small percentage of that growing market, its revenue could increase substantially over the next several years. Of course, that's a big if. Execution matters, competition matters, and technology leadership matters. Reason number 4, partnerships. One thing I always watch when analyzing smaller companies is whether larger businesses trust their technology. When major manufacturers begin testing or adopting a company's products, it adds credibility. While partnerships don't guarantee future profits, they can help validate that the technology has real-world demand. Now here's the most important reason. Reason number 5, the market size is much bigger than the company itself. Today, NVTS is still a relatively small player compared with industry giants. If management continues executing well, if revenue keeps growing, if profitability eventually improves, and if AI infrastructure spending remains strong, the company doesn't need to dominate the entire market. Even capturing a modest share of a rapidly expanding industry could make today's valuation look much different by 2035. But now let's talk about the risks, because every investment has them. NVTS is still not a mature, highly profitable company. Competition is intense. Large semiconductor companies have significantly greater financial resources. If AI spending slows, if customers delay projects, or if the company fails to execute, the stock could remain volatile for years. That's why I personally see NVTS as a high-risk, high-reward investment rather than a guaranteed winner. Now let's discuss price expectations. Nobody knows where this stock will trade by 2035. Anyone claiming certainty is simply guessing. In a conservative scenario, if growth disappoints, the stock could struggle and remain below expectations. In a moderate scenario, successful execution could potentially push the stock into the $20 to $40 range over the next decade. And in a very optimistic scenario, where AI adoption accelerates, power semiconductor demand explodes, and the company consistently delivers strong financial growth, some bullish investors believe prices above 50 or even higher could be possible. These are possibilities, not predictions. My opinion, I think NVTS is one of the more interesting speculative semiconductor companies because it's positioned in industries with long-term growth potential. However, I wouldn't treat it like a guaranteed millionaire maker. If I were investing, I'd consider it a small part of a diversified portfolio instead of putting all my money into one stock. Now I want to hear from you. Where do you honestly think NVTS could trade by 2035? Could it reach 25, 50, or even higher? Let me know your prediction in the comments. If you enjoyed this video and want more deep dives into hidden growth stocks before they become mainstream, don't forget to like, subscribe, and turn on notifications. Thanks for watching, and I'll see you in the next video. See you guys.